Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about RITHM Capital CORP quarterly report. RITHM Capital Corp offers a diverse range of businesses and services, including asset management for real estate, credit, and financial services, origination and servicing of loans, investment portfolio management, comprising plus single-family rental properties, plus real estate securities, plus residential mortgage loans, plus consumer and business purpose loans, title, appraisal, and property preservation, and maintenance businesses, asset management-related investments. The recent surge in RITHM Capital Corp's stock price can be attributed to a combination of strategic acquisitions, strong earnings reports, positive analyst coverage, and consistent dividend performance. The company's acquisition of Crestline Management, LP, a $17 billion alternative investment manager, has expanded its service offerings and asset management capabilities, contributing to long-term growth. RITHM Capital has consistently exceeded earnings per share (EPS) expectations, with notable instances in the second and third quarters of 2025. Analysts have also reaffirmed buy or outperform ratings and raised price targets, further boosting investor confidence. The company's consistent dividend payments and attractive yield have reinforced its reputation as a reliable investment. Additionally, RITHM Capital has been investing strategically in technology to improve operational efficiency and unlock cost savings. These initiatives are expected to drive enhanced profitability over time. As a result of these positive developments, the company's stock price has increased by over 15.28% within the past year, with year-to-date returns reaching as high as 21.24%. The primary drivers of revenue growth or decline can be categorized into three main areas: macroeconomic factors, industry-specific drivers, and company-specific factors. Macroeconomic factors such as interest rates, prepayment speeds, investment performance, and regulatory environment have a significant impact on revenue growth or decline. Industry-specific drivers also play a crucial role in determining revenue growth or decline. For companies involved in mortgage origination and servicing, key drivers include pull-through adjusted lock volume, gain on sale margins, and funded loan origination volume. In asset management, AUM growth, management fees earned, and incentive income driven by investment performance are primary sources of revenue. Company-specific factors such as acquisitions, financial condition of tenants, and changes in market conditions can also impact revenue growth or decline. Acquisitions can lead to uncertainty, disruption to business relationships, and loss of management personnel, while a decline in the financial condition of tenants can result in reduced rental income. Net income and profit margins. A year of growth, the financial performance of a company has shown significant improvement in 2025 compared to 2024. Net income experienced fluctuations, but overall, it increased by 85.7% from $123,581 in 2024 to $228,798 in 2025. However, there was also a decrease of $22,071 in net income from $649,585 in 2024 to $627,514 in the first 9 months of 2025. Profit margins also saw an increase, rising by 67.3% from 12.4% in 2024 to 20.7% in 2025. The origination and servicing segment experienced a slight increase in profit margins from 22.1% to 23.6%, while the investment portfolio segment saw a rise from 41.9% to 43.2%. These improvements suggest that the company's financial health has improved, with increased revenue and efficient operations contributing to higher net income and profit margins. The company's operating cash flow is a mixed bag. While there are instances where it generates positive cash flow, there are also periods where it incurs negative cash flow. The presence of both positive and negative operating cash flows suggests that the company's financial performance is not consistent across all periods. However, the overall trend indicates that the company is capable of generating positive operating cash flow in several instances, suggesting a degree of financial stability. The company's financial performance has undergone significant changes in terms of debt levels and interest expenses. Notably, the debt level has increased substantially from 2024 to 2025, with a total increase of $18.3 billion as of September 30, 2025. This is reflected in the company's total debt reaching $32,208,265. On the other hand, interest expenses have decreased by 21% in 2025 compared to 2024, resulting in a net decrease of $2.5 billion for the 9 months ended September 30, 2024 and 2025. This indicates that while the company's debt level has increased, its interest expenses have actually decreased. Management is optimistic about the company's performance in consumer loans, but notes that estimates may differ from actual results due to market volatility, interest rates, and inflationary pressures. The company aims to grow its asset management platform through strategic partnerships and accumulate residential mortgage loan portfolios. Management expects to meet liquidity needs for the next 12 months through cash on hand, cash flow from operations, and refinancing of short-term borrowings. However, there are potential risks associated with market volatility, credit risk, prepayment risk, and acquisition risks that may impact the company's performance. The company has made several significant acquisitions and divestitures to expand its business. Key acquisitions include Strategic Investment Partnerships SFR Properties, $56 million purchase price, commercial investments, up to $75.8 million unfunded capital commitment, Nures LLC Genesis equity interest, Paramount acquisition, $1.6 billion expected to close in Q4 2025. Notable divestitures include sale of interest-only securities redemption of Series A shares, $50 million, sale of shares through the ATM program. The company has a history of paying dividends to its shareholders. However, there is no conclusive evidence that it has bought back shares, with 2 separate instances mentioning the absence of share repurchases during specific periods. That concludes the financial summary for RITHM Capital CORP. Feel free to comment below, and I will be happy to answer them when possible.